Here, let me briefly introduce the statement of cash flows. Statement of cash flows report the information about cash inflows and outflows for three different activities. 1. Operating activities. 2. Investing activities. 3. Financing activities. Operating activities are related to the transaction entering into the determination of net income. These cash inflows and outflows are related to the revenue recognition and the expense recognition. Well, they differ in the timing of recognition. The income statement mainly reports the company's operating activities based on accrual accounting, while the statement of cash flow for operating activities report the cash flows related to the operating activities. Okay, investing activity including the cash flows, inflow and outflows related to the long-term assets purchase, retirement, and sales, and also the purchase and sales of non-operating investment assets. For example, the company purchase and sales of securities, merge and acquisitions, disposal of their operating segments and subsidiaries. And any cash flow related to these are reported in this section, investing activity. Last one is a financing activity. It reports the cash inflows and outflows from the transaction with the creditors and owners. For example, if the company issue notes, borrow money from the bank, creditors, pay off the loan, these are financing activities. Or issue stocks, paying dividends, or retire, or buy back stocks are related to the financing activities. Next, this is a statement of cash flow for the company we just discussed. Net cash flow from operating activities was negative 18,500. It means the company has a net operating cash outflow during this month. While investing 12,000, again, net cash outflow from investing activities. Financing 99,000. Cash inflows from financing activities. The reason operating cash flows was negative because a large payments for the rent, prepayments for the rent, and also the prepayments for the supplies, which result in a negative cash flow from operating activities. Well, $12,000 was the purchase of the equipment, office equipment. This is also a investing activities. Financing cash flow was positive because issue stock in exchange for cash 60,000 and borrow from bank 40,000. Even a paid dividend $1,000. So during the first month, the company mainly used the cash flow from financing to support its activity in investing and operating. And you may ask where I got these numbers, right? So we can revisit to the general ledger. In this one, general ledger, you will find there are 11 transactions that have impact on the cash. On the left, debit, these represent cash inflows. On the right, these are cash outflows. These 11 cash flow, we just reorganize them. We can have statement of cash flow. Basically, we just classified the cash inflows and outflows into operating, investing, and financing. Finally, the change of cash flow is sum of these three. That's statement of cash flow. And this statement cash flow is prepared by using direct methods. We just borrow the information directly from the cash T accounts. This financial statement provides the cash flows from three different activities. In the future, when you analyze financial statements, this provide useful information